So with a little bit of investment, we put so-called SART plant, which is off-the-shelf technology used widely worldwide, to process this high-grade waste and add very significant cash flow and net asset value because we do not have mining cost. The stuff has already been mined out.
Hello, you're watching Proactive. I'm joined by Artem Volynets. He's the chairman and CEO of ACG Metals. Artem, very good to speak with you again. Congratulations on that oversubscribed $15 million placing. What does this strong investor demand tell you about confidence in ACG's strategy and growth outlook?
Thank you, Stephen. Good to be back here. The $15 million oversubscribed raise is really a secondary news out of the publication of our news yesterday. It is not surprised that we have an oversubscribed placement because we have developed the technology and we announced a scoping study to the market of how to treat waste. And with a very small capex, 39 million spread over two phases from 29, then in 2 years another 10, we generate 300 million and over $300 million in free cash flow. And that adds $200 million NAV to our asset base, essentially close to 60% increase in net asset value. That is the main news, and the reason the project is has such an outstanding economics is very simple. You process waste. So if you may remember, Gediktepe deposit has oxide layer on top from which we produce gold and silver, and we are halfway building flotation plant to produce copper concentrate and zinc concentrate from the sulphide layer underneath. In between oxide and sulphide, there is an enriched ore or intermediate ore. We have to mine it out to get to the sulphide, so it's stored on the site as waste, but this is a high-grade waste. It's 2% copper waste. So with a little bit of investment, we put so-called SART plant, which is off-the-shelf technology used widely worldwide, to process this high-grade waste and add very significant cash flow and net asset value because we do not have mining cost. The stuff has already been mined out. It is stored on our site. We only incur processing cost at a very small rate, like $15 per ton, and that leads to massive increase in NAV and the value of the company.
How low risk is the enriched ore treatment project technically, Artem?
It's off-the-shelf technology. There are plants in Turkey that operate. We're using this, which utilize the same technology. We are using the same engineering firm as another company used 15 years ago to build a very similar plant nearby. It's widely used, and we have an excellent technical team to implement it. I would also note that our numbers, this $300 million free cash flow, $200 million NPV, is based on consensus pricing, which are 25% below current spot. If we add spot pricing, the NAV addition will be not 200 but close to 300 million. On top of that, our capex numbers, which are very small already, but they include 25% contingency. So we are very comfortable with executing on that project. It will give us start to give us cash flows at the end of next year when we exhaust our oxide ore, as we discussed with you before. We are looking to wait to continue producing gold and silver after the end of that oxide ore, and that's exactly what we are doing with this project. So not surprised to see a very receptive reaction from the markets, essentially meaning that we raised money at a premium to 10 days VWAP, 20 days average share price, 30 days average share price, and this is certainly tells you something about direction of the company. But essentially what this massive addition of cash flows and NPV to us means is that we are back in terms of the comparison to the peer group in terms of our trading multiples. We are back into the same place when we were in June before when we started marketing the story. At that point, ACG were trading at 0.5 price to net asset value at below 3 times free cash flow. After that, the shares went up 160%. Well, you know what? We are back at that 0.5 price to net asset value. We're back at 2.6 times a price to free cash flow. So there is a massive upside for us and our new investors as well.
I mean, looking ahead then, what are the key milestones that those investors should be watching out for as you move from financing to permitting and construction of phase one next year?
So our next key milestones are, as you correctly say, the next big milestone is achieving commercial production from the sulphide, which will be copper concentrate and zinc concentrate. We are on budget and on time to start that commercial production in the middle of next year. So in June of next year, that's a big milestone. And then we'll continue to find other ways to improve the operations at Gediktepe, which is becoming a world-class producing asset. And then obviously at any given point in time, we are working on M&A. But as this project demonstrates, the best M&A is internal because it's de-risked, it utilizes the same mine, etc. But certainly we will come back to the market once our M&A processes come to fruition.
Sure, we have lots of conversations ahead then. Artem, thank you very much for taking the time to speak with us today.
Thank you so much.
Artem Volynets is the CEO and chairman of ACG Metals.